Russian President Vladimir Putin has greenlighted a military operation in Ukraine. Meanwhile, the area is close to the border and some military targets are being fired on. The full-blown invasion has immediately set global markets in motion. The Moscow Stock Exchange index slumped by a whopping 30%. Other major global stock indices quickly followed suit. Yields of European bonds also plummeted. World stock markets are hit by massive sell-offs. Amid such turbulence, commodities are gaining in value. Brent crude has topped the landmark level of $100 a barrel for the first time since 2014. Now Brent price is trading not far away from this mark. All in all, financial markets are now overwhelmed by entirely geopolitical factors. Despite the lack of information on new sanctions, analysts foresee a tough response from the West to the Kremlin's intrusion. Further inflation acceleration worldwide and soaring energy prices are the main ideas in the most popular forecasts. In this context, crude oil is expected to surpass $100 in confidence, heading for new historic highs. The technical picture looks as follows. Brent futures have managed to break the psychological level of $100. Currently, the price is making efforts to settle above this level. Obsessed by the speculative fever, traders neglect the signs that the commodity is extremely overbought. Nevertheless, under such market conditions, crude oil is set to extend its rapid rally. As of today, the nearest resistance levels are determined at $110, $115, and $128. Amid the military operation in Ukraine, the Russian ruble has taken a nosedive. The Russian currency has weakened to a record low of 89.60 against the dollar. Exchanges in Moscow and Saint Petersburg had to suspend trading in light of the ruble's sharp depreciation. After the exchanges were reopened, the ruble hit a bottom of 90 against the dollar. For the time being, the Bank of Russia is trying to deal with such abnormal turbulence. The regulator announced a forex intervention for the first time since 2014. Selling the national currency is likely to tone down the roller coaster and provide the ruble with support. It's hard to judge whether such measures will bear any fruit. It's too early to say that the situation is under control. Obviously, the market is badly hurt by a panic and pessimism fueled by the prospects of new tough sanctions. Thus, we can affirm that the dollar-ruble pair is still in the grip of speculators. The dismal information background escalates the panic, pushing the ruble to new historic lows. Unfortunately, traders downplay technical analysis, giving priority to fundamental analysis, in particular political news. Apparently, gold has rallied notably, benefiting from the hostilities. The price surged from $1,910 to $1,945 a troy ounce. Gold is still trading higher, and so are other precious metals such as silver, palladium, and platinum. The ongoing rally proves that the yellow metal again serves as investors' favorite safe haven asset. A lot of analysts define gold as one of the most lucrative assets, so the precious metal is set to assert strength in the coming days. From the technical viewpoint, gold futures have escaped from the flat market. The price surpassed the high printed on June 1, 2021 and continued a confident rise. The outlook for gold is firmly bullish. Investors want to play safe on the back of the geopolitical jitters, flocking to safe haven assets. Gold has always been one of the most reliable assets for investment. So despite global turbulence, international politics and financial markets tend to adjust to new circumstances very quickly. We wish you patience and common sense, make sensible trading decisions and do not give in to a panic. Keep track of important events on InstaForex TV channel and see you back soon.